So if you just go all the way, broad at the start, do you believe that a valuation of company is it a science or an art, or always in between?
I would say it's always a mix, because I mean, what is required? You require a combination of financial analysis, market research, and subjective judgment in a way. And you need to determine the fair market value of an asset or a business based on factors, again, financial performance, industry trends, competitive landscape, future prospects. So I think it's always a mix. Is it a 50-50 mix? Is it a 75-25? In my view, there's no general rule. Evaluation must always consider the story behind the numbers as well, right? And that's the art part of things. And I would say very importantly, it also depends where's the company in the development. If you look at asset-heavy business or asset-light business models, scalability, right? And I would argue in shipping, in hard asset shipping at least, it is generally more science-based than art-based. Than an early stage startup in a digital business model where you have scalability and you don't see the value yet, but you need to believe in the value tomorrow. But what is, in my view, most important, we touched on it earlier, is the people, especially in shipping, because shipping companies in the same sector perform differently because people take different decisions about capital allocation. If you have asset-heavy businesses, it's really, when do I increase leverage? How do I treat capital allocation decisions? So I would argue, when you look at the art part of things in shipping, you need to look at the people and what they decide and why they decided. And do we have the right sponsor, for example, also behind the company? And that is very important. But and finally, on listed shipping companies, it's a lot about momentum and sentiment. I mean, you got that sentiment in Greece, as you said. People said, container market was very bad. But it's if you fight against sentiment, you do not get the right valuation. And that's actually the interesting point for people to run their numbers, because then you're usually mispriced.
So I know this is very hard to answer specifically, because it's probably, not that the compliance would want you to answer. But if you try to break down the value of MPCC, what should be the stock value or the stock price, sorry, and the valuation of the company, do you think that you look at the same metrics as everyone from outside the company? Or like, how can people try to make a good judgment if they're looking specifically at MPCC?
Well, that's a very good question. I would say, I mean, we are always very transparent in our presentations. We talk about, our backlog, the steel value of the assets, and the upside there. I would argue, as an investor, you need to, and that's my point, you also need to consider not just the EBITDA and the value in the company. You need to consider, will the company be priced adequately? And that's sentiment, that's also management. And will the cash flow actually come my way? Can I either exit through the stock price that is fairly valued because there's positive sentiment, or do I actually get my money through dividends? And I personally think that I probably look at it slightly differently, because I obviously know that my conviction is we will continue with the dividend, right? If the market comes down, our dividend policy will mean we have to reduce the dividend, because it's 75% of net profit. Net profit comes down, dividends come down. But at least people know what to expect. And I think that's probably why I would attribute a slightly different value to our company than outsiders who don't have that knowledge of, is the management really doing, is the board really continuing the dividend, or will they, cut it at some stage, because that's the way, most companies do it. And my full conviction is that we will continue. And that's probably why I have a slightly different view on valuation.